Good morning. It's Monday, September 23rd, about 6 a.m. Central Time. Overnight, the precious metals, and specifically the base and industrial metals, are under pressure after Friday's explosive rally. Looking at the overnight price action, you have December gold. Did make a new all-time high, 26.56, but it is trading right now just about unchanged at 26.47. Now, here's where the problems occur. December silver down 53 cents. That's down about 1.68%. Was significantly lower, but it did come back up just a bit here. Had about a 90-cent range overnight. We're trading just below $31 at $30.97. You get into the copper market down 330 at 431. That's down 3/4 of a basis point. You look at the platinum market down 2% at 960. That's down $21. Looking at the other metals here, you do have aluminum down 1%. You also have palladium down 2.5%. So a lot of pressure there, specifically on the base and the industrial metals. Now, why is that happening? You look at the euro currency here, down about 0.5%, and that sell-off in the euro currency is helping boost the dollar index just a bit. Now, the Eurozone here, their private sector economy shrank for the first time since March. There's concerns of a deepening manufacturing downturn and that there's concerns that the economy is running out of steam. The composite PMI data, and you're going to want to note that today we will have our own PMI data release. And I did read a research report once written by Goldman Sachs that indicated that the PMI data is the most important data point for specifically silver and copper. So you want to note that does come out today. Now, getting into the Eurozone one, the bull bear line on the PMI data is 50. So anything above 50 shows economic growth, especially in the manufacturing sector. Anything below that shows contraction. The number came in at 48.9. The previous month was 51, which was above that 50 level, and the expectations were for 50.5. So we're really seeing that their economy is falling quite fast and it's deteriorating. So there is some speculation that they're going to have to do more interest rate cuts over in the Eurozone. Now, any sell-off that we get in the base metals, I think, will be limited in nature because of the fact that China is starting to announce plans that they are going to do a briefing on the economy and they may adjust short-term policy rates. It fuels speculation that they really want to ramp up their efforts and revive that growth. So they do have a growth target of 5%. That's like their GDP. And most analysts and most banks are expecting something significantly less. So they are going to have to take action if they want to achieve that target. Now, switching gears to the CME's Fed Watch tool, November 7th, you got to circle that in your calendar. That's going to be the next Fed meeting. There's speculation that the 53% chance that they're going to cut 50 basis points. Most of the commentary that I read over the weekend, people are really believing that they're going to cut 50 again. You look at the odds of a 25 basis point cut, only 47% chance. Now, looking at the data coming out today, we've got a few things coming out. We've got that flash manufacturing PMI, expecting 48.6. The previous was 47.9. If you continue to see that take a downturn, it might hit some of these markets here. The flash services PMI, that is significantly higher at 55.3. We will also have three different Fed members speaking today, Bostic, Goolsbee, and Kashkari. So if the market makes some kind of quick gyration, chances are one of those speakers are saying something. Now, you get into the specific with the charts and everything, you look at the platinum market, did break below the 50 and 200-day moving average. My line in the sand for the platinum market is really 935. If we break below there, chances are we're going to retest 900. I'll end up waiting for a dip below there to take some speculative longs with some of the clients in that particular market. The copper market is kind of leveling off after Friday's big run up here. And I think that the copper might have got a little ahead of itself. We saw about a 34-cent rise from the September lows to these highs on Friday. So a pullback would be natural in nature, and we might pull back to the 200-day or the 50-day moving average. Now, getting into the silver market, we had a big explosive move on Friday, and it looked like we could have broken out to the upside and really threatened that 32.50 kind of zone in the overnight session if it wasn't for this disappointing PMI data. So we'll have to see what that brings here today. Now, my line in the sand on the silver market, it's not really a line in the sand, it's just something to note, is 30.03. That was the low when the Fed had its meeting. We break below there, chances are we're going to test the 50-day at 29.46, and then where things get ugly for the silver is if we break below 29. So you'll want to tighten up those stops, things like that. Look at possibly without significant volatility, although it's moving 90 cents, perhaps some short dated put options in that market. Just for protection. Gold looks to be well insulated. It looks to be operating completely independently from the silver market at the moment, with that gold silver ratio at 85-1 and starting to tick up a bit. I think that any kind of dips on the gold market, you're probably going to see buyers come in here. And if you look at the ETF holdings, they rose 3.5 million ounces to 64 million ounces. So some of the ETF investments coming in there specifically into that market. So we're going to have to see what happens here. A couple other things to note. The way you want to look at this market from here to the end of the year is note that there's 7 days left about on the quarter. We're past the September option expiration, meaning the S&P 500 is pretty much freely able to move back and forth until that next quarter. You might see some quarter markup, and you might also see some quarter profit taking. Then you go from here about 35 days out. That's where the election is. So you got to look at this like quarter end, new quarter starts, the time period between now and the election, and then once we get past the election, you look at the year end and you build your positioning for that. So break this down into 4 different segments here for your particular trading, especially if you're using options and things like that. You got any questions, give me a call. I'll be on the Schwab Network in about an hour with Ben Lichtenstein, and we're going to break down what's going on in the macro markets and probably the currencies. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.